JB here. Hope everyone's doing outstanding. Thursday, December 18th, 9:13 on this fine morning talk. Quick about the market, some names I'm looking at go from the S&P futures. Solidly in the green here, up almost 0.8%. CPI data this morning, much cooler than expectations. Markets were already kind of in the green and boom, just took off after report. Also, I think the weekly jobless claims came in better than expectations. I with the market having some weakness earlier in the week and yesterday, maybe this is some of a relief bounce. I don't know. Uh, I was talking about yesterday afternoon on the rant. Just to me, like this whole scenario with the news yesterday morning, it just I don't know. Doesn't feel like the market's ready to have a serious pull. But maybe I'm wrong. But we'll see how today plays out. I don't like gaps, right? A lot of the best days I have, especially on the trading side of things, are when we have a gap down and a reversal. A lot of times when we have these gaps to the upside, some of the names that I'm in, or even other names, the highs of the session are usually right at the start of the day. Those are my favorite days, right? Because a lot of times, if you're not in trades, you make trades at the open, and obviously, if that's the highs of the day, you're down on the trade or flat. So hopefully that's not how things play out here today, and there's some follow through. But yesterday, if you're just reading on FinTwit and all the media outlets or what have you, you would think that the market was ready to just crash, or we were in the midst of crashing. And the S&P was down 1% yesterday, so it wasn't like markets weren't selling off. It just didn't feel like it to me. And the second day or third day in a row where the VIX's move was kind of muted until the end of the day, I think it was up like 4 or 5% for most of the day until the end of the day pull. And I wouldn't say it was just the market sell off was just a few names, but my watch list still had 40 or 50% of the names are still in the green. So uh, a good thing if even if we do get some kind of crazy AI bubble pull, that maybe this is kind of showing that if it is, it'll just keep to a certain sector, right? There won't be a huge contagion, whether it be the retail names, discretionary names, whoever can rally or hold their ground, even if the AI names sell off. Maybe yesterday was kind of like a signal saying, hey, if we are in a bubble or if there is some continuation on some of these names, that maybe the market can hold up. But I made a joke earlier this morning on FinTwit. It's like all those folks who were, yesterday it was like, oh my gosh, yesterday's news with Oracle and Owl Capital pulling back, Oracle stepping away from this $10 billion data center. It was like a Lehman Brothers moment, right? Or a Silicon Valley Bank. Who remembers the big bank runs? Gosh, I mean, all these different events. I'm like, those events weren't really foreseen by the market. These are like reports coming out. And earlier in the day, after the report came out, Oracle refuted the report, saying it's not exactly as the report has said. But anyway, what it does, it gives fodder to all these market bears and pundits who call for this AI bubble. And I'm not dismissing it, right? I've been talking about the great circle jerk since at least September, maybe August. I mean, there's a lot of moving parts with this. All these big names, I wouldn't call it colluding, but I guess maybe that's the way to say it. But they all have all their hands in the cookie jar, all working together with these huge billions and billions of dollars of deals. That if you're not one of the jerks, you need to be part of the jerks. Otherwise, your stock doesn't perform well, right? And then you have to start thinking of what happens a year, 2, 3 years from now when one of those jerks go belly up, right? And everybody has deals with them. It's got to be not a good situation. I'm hoping that never comes. We don't ever have to find out what happens with that. But yesterday was like all these folks are writing about the death of the markets and AI, and all of a sudden here we are rallying here today. So I always think of days over the years where I used to fight this trend, not all the times, but I'd be one of those bears, right? Who, I'd be in puts. I'm like, you read all the headlines, like, wow, the market's ready for this big crash. We're at the 50-day moving average. Technicals are setting up. We're gonna have a big pullback. I'm gonna be loaded on puts. You wake up in the morning and futures are down 1%. You're like, wow, this is great. And then some data point comes out and you just get destroyed. And you're like, how's the market up today? Wait a second. So-and-so company declared bankruptcy or whatever. And it's just, over time, you just learn it most more times than not. The market just shakes off a lot of stuff, right? I remember one of my better examples, and I don't mean to go off course here because I'll talk quick about markets or individual names, is the flash crash. I don't know if that was like 2014. And I remember it wasn't even like a fundamental, black swan event, a bankruptcy. No, someone hit a button and the billions of dollars or whatever hit the tape and it caused a flash crash and all these other names fell. Gosh, I remember this Apple pre-split. I think I had the puts. Apple might have been like a $300 stock, but it was a couple splits ago. And I had the puts and I couldn't even close them out and they were up like 10,000%. And then the markets I don't think there was a halt. So back then there wasn't a halt unless it was like a 7% down day. So and it got close. I forget the numbers, but my point in that is like the market's found footing, and then during the day I'm rationalizing in my head. I'm like, how can anyone in the markets right now trust the market? Like, how is the market going to rally from here when all it takes is someone hitting a button? It has nothing to do with any fundamentals, valuation, or whatever, and cause a market to sell off billions and trillions, whatever it was at the time. So it took me like days to get over it and not to be in puts because I'm like, it doesn't make sense to me. And then of course here we are, a decade later, and markets are back to normal. So it just goes to show you, like at some point we do have some crazy pull, but to me, when everybody knows there's a pull coming, it usually doesn't happen, right? So all right, rants for other days, war stories. All right, so I talked about the 679 being a big spot on the SPY where it looks like we're going to get up there today. Hopefully we can break that and go. That'd be a great sign here, back over the 50-day moving average. Yesterday was like the action, and I don't like to use my gut as like a way to trade, right? I mean, people say, "Oh, use your intuition, your gut." I mean, you should have a trading tool belt. The charts, the technicals, fundamentals, all that stuff should be part of it. Yeah, sometimes your gut goes into some of these trades. And yesterday, and even the day before, even the market was pulling, and it was like my guts saying, "I don't." Doesn't feel like we're having substantially more downside. I did get those Broadcom puts. They paid out, covered costs, closed the last out when it started to look like it was starting to bottom out, and they served their purpose. And now, in lieu of trying to time bot or being crash puts, holding up puts for and hoping for a bigger pull here today, market's rallying, and the names I'm in, hopefully some of these call positions start to pay out, and maybe I'll get a little aggressive here into the end of the week. So that's kind of the overall market. Also of note, yesterday I pointed this out midday when the market's selling off 1%. The amount of stocks trading over their 50-day moving average on the S&P were going higher yesterday, despite the market pull. So anyway, all right. So that's overall markets. Just quick on individual names. CGC, it's over $2 here in the pre-market. Rallied up to 228 yesterday morning, right after the bell. Locked some of my April strikes are 100% to cover costs. Held the rest. The plan was to add more strikes over this 199 handle. And then it fizzled yesterday. And right after it hit 228, got down to 210, to 200. And then it was a $1.90 and so for pretty much the rest of the day. At some point, this executive order is going to get signed. The question now is, will it be a sell the news event, or is it going to be the start of a rampage on some of these names? So I don't want to get overly aggressive. I do think if it is a start of a rampage, any calls you get on CGC are going to seem extremely inexpensive a couple weeks or months from now. So with that being said, I have the April strikes, plenty of time there. But you know what? In lieu of getting CGC calls, I might get those IIPR calls. So that's CGC. Where's my other charts here? SERV Robotics got upgraded today. Not upgrade, actually. Initiation, Oppenheimer, $20 price target, outperform rating. I kicking myself for not getting strikes yesterday. 975 is that key spot that I had for the last couple months here, and it broke that. So that I can rationalize that and say, okay, well, that's why I went and got the strikes yesterday. I'll be getting some today. Later dated strikes. 1375 is the next handle that it heads to. That's SERV. RH is up here at 176 here this morning. Timing is tough on some names, right? Options is always about the timing part of it because unlike holding a common stock, unless you're going to die, right? Your time is I wouldn't say finite. I mean infinite, but you can hold a stock till it comes to your target, right? An option you don't have that because you have the time element. So RH probably gonna be over $200. It's a matter of timing it, right? So still holding those 190 freebies. Frustrating holding the last 2 days after that pull from 175, but it's over 175 here. Up 4 sessions in a row. You have to think that earnings is the bottom for it. And I think it heads over $200. So if I find any decent risk rewards to add to my strikes, I will. And hopefully, I mean, we've seen it before. It goes on epic runs. 5% one day, 7% the next day. That happens. Could be over 200 by tomorrow. So seen crazier things. So that's RH. Solar Edge disappointing yesterday. I wouldn't even say it's disappointing, but back into the green on my calls after the open was 30.80 and then did nothing but melt lower for the rest of the day, closed down nearly 2%. It's back over 30 here in the pre-market. Probably going to look for some strikes into next week, depending if it holds gains here today. I'll probably wait till 10:30 just to get the morning jitters out of the way. Then look for some strikes into next week on Solar Edge. J-Rock just posted it. Nike reports earnings after the close. One of these quarters, and it's happened on some of these names. I think Decker's another, is like the turnaround, right? Nike's been a turnaround story for, gosh, I don't know how many quarters now. New CEO, you're waiting for that to bear fruit. You also have the tariff backdrop. What does that look like? Inventory levels always an issue with Nike. But to me, you look at other names, and Deck is starting to come back to life. Lulu got a activist stake yesterday. Uh, some of these names in the apparel space have started to go. Is Nike the last one? I don't want to hold calls on Nike and stare at them for the next month or two because it doesn't do anything again. So I'm a little cautious adding strikes, but I might get some lottos into earnings after the close today because you have to think one of these reports sends it. It just, for some reason, just feels like maybe this is it. So don't be surprised if I had some spec calls on Nike. And that's it. Let's have a great day. I'll be back on audio later. Rock and roll.